Now we are going to start the second problem on admission of partner. The problem is as under. Akbar and Amar were partners in the firm sharing profit and losses in the ratio of 3:2. The balance sheet as on 31st March 25 is as follows. Out of this asset side, sundry debtors, land and building stock, plant, machine, furniture, fixtures will go to the new balance sheet and cash will go to a separate account. After that, we will come to the liability side. Sundry creditors will go to the new balance sheet. Amar's and Akbar's capital will go to their respective partners' capital account, and the general reserve will be distributed between the partners. The adjustments are that on 1st April 25 they will be admitting Anthony as a partner. Anthony is going to bring 10,000 as a share of goodwill which will be retained in the business. Then he will bring rupees 12,000 as his capital for 1/5 share. After that there will be revaluation of the assets. Land and building will be valued at rupees 30,000 which was earlier 25,000. Plant and machinery will be valued at 12,000 which was earlier at 12,000. Now it will be revalued to 10,000. Furniture fixtures will be valued to rupees 2,000. Earlier it was 4,000. And a provision for 5% to be made for doubtful debts. That means out of 14,000, RDD needs to be created at a rate of 5%. In other words, it means 5% डूबने के चांसेस है, इसलिए बिजनेस 5% का प्रोविजन करके रखेगा. अब नाउ वी आर गोइंग to the problem. First of all, we are going to prepare all the format in this way. We are preparing the books of Amar and Akbar revaluation account for the year ended 31st March 25. Then will be partners capital account. Then will be balance sheet in the books of Amar and Akbar Anthony. Balance sheet as on 1st April 25. Then as a working note, we will be preparing the goodwill account and the cash account. So here we start. Cash. Your cash is an asset. Asset has got debit balance. It will go to the debit of cash account. To balance brought downward 8,000 rupees. Next we have got sundry debtors rupees 14,000. That will go to the new balance sheet inner column because there is an adjustment. Then we have got land and building rupees 25,000. That will go to balance sheet inner column, there being an adjustment. After that we have got stock. Stock 10,000 will go to balance sheet asset side inner column. After that plant and machinery 12,000 balance sheet inner column asset side. After that we have got furniture and fixtures 4,000 balance sheet asset side inner column. We have completed a posting of the asset side. Now going to the liability side. First item is sundry creditors, that will go to the balance sheet liability outer column because there is no adjustment. Then we have got a capital, Amar's capital by balance brought downward will be writing on the credit side of the partner's capital account. Amar 32,000. Then Akbar 22,000. Then we have got a general reserve of 12,000 which will be distributed between the partners. And this general reserve will be distributed in the old profit sharing ratio, that is 3:2 by general reserve. Amar will get 7,200 and Akbar will get 4,800. So with this we have completed a posting part. Now we go with the adjustment part. On 1st April 25 they admitted Anthony in the partnership firm. The first adjustment says that Anthony is going to bring rupees 10,000 as a share of goodwill. So in the business cash कम जो कि कैश आया है, मैं कैश अकाउंट के डेबिट साइड में लिखूंगा गुडविल रुपीज़ 10,000 किस तौर पे आया है, गुडविल के तौर पे आया है. दैट्स वाई गुडविल अकाउंट विल बी क्रेडिटेड. एंड नाउ सिंस दिस गुडविल इज गोइंग टू बी रिटेन इन द बिजनेस, ये जो गुडविल 10,000 रुपया है विल बी डिस्ट्रीब्यूटेड बिटवीन द बोथ पार्टनर्स इन द ओल्ड प्रॉफिट शेयरिंग रेशियो. Amar and Akbar. Amar will get 6,000, Akbar will get 4,000. Now this 6,000, 4,000 will be credited to the partner's capital account. Okay. After the adjustment number 1, we have got adjustment number 2, in which Anthony will bring rupees 12,000 for his 1/4 share in the future profits. तो 12,000 रुपये अपने बिजनेस में आने वाला, इट विल कम टू कैश. 12,000 to Anthony's capital, cash being a real account, and real accounts का rule है debit what comes in. Since there is a receipt of cash, 12,000 will debited to cash account. See, it was given by Anthony, it will be credited to Anthony's capital account. After that, we have got revaluation of assets and liabilities. Land and building will be valued at rupees 30,000. So we go to asset side. Earlier the value was 25,000. Now the value has been increased to 30,000. So there is an appreciation of 5,000. I wrote outer column 30,000. This 5,000 will go to the revaluation account, credit side being a profit. All the profits gains are shown on the credit side of the revaluation account. After that, we have got plant and machinery, which is valued at 10,000. Earlier the value was 12,000. Now it has been reduced to 10,000. So there is a depreciation of 2,000. Outer column में हमने लिया है 10,000 रुपये. This 2,000 will go to revaluation account debit side because it's a kind of a loss, reduction in the value. After that, we go to stocks valued at rupees 12,000. Earlier the stock was 10,000. Now it has valued increased to 12,000. So there is an appreciation of rupees 2,000, and this 2,000 will go to revaluation account credit side because it's a gain. Gain will be recorded on the credit side of the revaluation account, and all the expense losses will be recorded on the debit side of the revaluation account. Furniture and fixtures rupees 2,000. Earlier my value of furniture and fixtures was rupees 4,000. Now it has been reduced to 2,000. So there is a depreciation of 2,000 which will be recorded on the debit side of revaluation account. Okay, then a provision of 5% to be made for downpayment and output dates on debtors. So we have got debtors of 14,000. On this 5% में chances है कि पैसा डूबेगा, इसलिए मैं पहले से प्रोविजन करके रख रहा हूँ. तो 14,000 का 700 रुपया आता है. This 700 being a loss, that will go to debit side of revaluation account. With this I have completed all the posting and adjustment part. The next step is to do the totaling and balancing of the revaluation account. Credit side total comes 7,000. Debit side total comes 4,700. So balancing 2,300 represents the revaluation profit. This 2,300 will be distributed between the partners in the old profit sharing ratio. Amar will get 1380, Akbar will get 920, and this will be credited to the partner's capital account. Now we do the balancing of the partner's capital account. Anthony 12,000, Akbar's coming 13,720, Amar coming to 46,580. Then we take this total on the debit side of the partner's capital account to balance CD. So balancing figure 46,000, 31,000, 12,000 will go to the balance sheet capital account liability side. Amar, Akbar, Anthony. We do the totaling of this. Then we close the goodwill account. There is no balance, simply balancing is there. Then we close the cash account. Debit side total coming to 30,000. Then we do the balancing of it by balance carried downward. This 30,000 will come to cash account. Then we do the total of the assets side 97,300. Then we do the totaling of the liability side 97,300. With this the balance sheet is tallied, and now we have completed the problem.